financial assistance organization. What we do is provide guidance and resources to senior citizens and low-income families to help them be able to obtain financial freedom. And we're here today to provide you with some tax laws that are coming out. And I want to be able to provide some financial budgeting for seniors as well. So let's get into the grit of everything. This is one good thing that I wanted to really point out to a lot of people, the standard deduction. In the past, if you were single and you're filing, your standard deduction was $15,000. This year it went up to $15,750. What that's saying is once you are obtained your adjusted gross income, and they see after all of your revenue has been put in, your wages, Social Security, pension, stuff like that, then you get to your standard deduction. That standard deduction, what that does is minus how much your taxable income will be. So, for example, if your income was at $50,000, this standard, if your adjusted gross income was at $50,000, your standard deduction is now going to lower that down to like $45,750. I'm just going to throw numbers out. So that way, you won't be taxed on the full $50,000. You see the difference? It's just going to deduct that amount from your taxable income. So another good caveat is there's an extra deduction for seniors. So on top of that $15,750, you'll get an additional $2,000. So now it's $17,750. So these are all good things that they're giving for senior citizens, because now your taxable income is now, instead of 45, it's 35. So the lower your taxable income is, the better your chances are, because now you don't have to pay that much in taxes. So our goal is to always lower our taxable income, okay? Another good thing is your taxes are not determined by your age. They're not determined by your gross income, and your Social Security is taxable. Why is your Social Security taxable?
It didn't used to be that.
Well, here's the thing. It's always been taxable. What happens is they're telling you that a portion of your Social Security is taxable, not the full amount. If you make more than what their standard requirement is, then a portion of that's going to be taxed based on what the amount that is over. For example, you make $50,000, you're single, but the IRS, they said that you cannot make no more than $25,000 in order for your Social Security to be not taxable, but you made $50,000. So what's going to happen is $25,000 of your Social Security is going to be taxed. That's the difference there. If the IRS are saying that you can make as much as you want, but if you're single, that's your father's status, and you're making more in your gross income, and they do it by your gross income. Where's your gross income? It's your wages if you have wages, it's your pension if you have pension, your 401k, your annuities, your interest, any income you have, they add all of that up, and it came to $50,000. And then now you have your Social Security saying that you're only supposed to make $25,000. You made above what your required is. So now a portion, not the full amount, a portion will be taxable. That is how that's done. A lot of times we're hearing that Social Security is not taxable, but they have to dig deeper into that and indicate that a portion is not taxable, not the full amount, based on whatever your guidelines is. Now, if you're married, filing jointly, that $50,000 will not be taxed, because now you're within the guidelines. You see what I'm saying? So that's how that's done. So there's things are a little different with Social Security, like they don't withhold any taxes also. A lot of times people don't want to withhold because you don't get that much with Social Security. But if you have several streams of income, I encourage people to try to deduct whatever they can, as long as it won't go into your daily living, cost of living, because we are all used to living a certain way, and I do not encourage anybody to take away from their income, but you don't want to be stuck with a big tax bill at the end of the year, okay? So the way that happens is you have to ask to have taxes taken out, your Social Security. If you feel you have multiple streams of income, you're able to have taxes taken out your Social Security to help with your tax liability at the end of the year, then I would say fill out the form W-4V, and then you can opt to withhold 7%, 10%, or whatever the amount that you feel will be comfortable enough for you to help pay into your tax liability. Not everyone do it, but I encourage it if you have multiple streams of income. That's the only time I say that. Other than that, I don't want to have the client to worry about paying taxes at the end of the year. You see, because they didn't pay too much into it. Another thing is, as we get older, a lot of us have 401ks, we have pensions, 401ks and Roth accounts. There's what you call a required minimum distribution. Once we hit 73, we're required to take that money. If we don't take that money, the IRS is going to tax us on that. They tax 50% on that, and not know everyone knows that. So a lot of times, if you don't need that money, then let it stay for the end of the year, and then you call your financial institution and say, okay, send me whatever my required amount is in one lump sum at the end of the year. That's okay. That's okay to do that. But to not take it, you don't want the IRS to take half of your money for no reason, because you worked hard for that money. So this is called required minimum distribution for individuals that have 401ks that they really don't need it, so they let it sit. When you get 73, take it out. If you don't need it during the year, wait until the end of the year, and then to tell your financial institution that's holding that account, give me whatever my requirement minimum distribution is in one lump sum, and then that will fulfill your obligation. Okay? So that's very important for people to know, particularly as we get open age.
Mine just sits in there, other than the fact that I took out that money.
Right.
When I moved to,
Yeah.
I don't get any money from it, but I'm only 68, so.
Okay, you have time.
I have time.
Yeah. Yes, you have time. So, but just remember, when you get 73, that's what it is. Now, every year the tax law change. So keep in mind and just keep speaking with your financial advisor to say, is it, when you hit 70, say, what is it that I'm supposed to, because right now, last year was 72, this year is 73. Hopefully they'll take it away and let us, you're telling me to just use my money even if I don't want to, is what the government is saying. Why? Because they want the taxes on that. If you don't use it, they don't give their money, and that's what's happening. So they're going to make you use your money, but if you don't use it, now we're going to take half of it. So, it's not a fair trade here, but this is just how it is for right now. So in order to help minimize your taxes as a senior, take advantage of your tax credit. Then use your bigger standard deduction, and then make up catch-up contributions. A lot of times you don't have to worry about that, but my thing is to take advantage of the tax credit for the elderly, because they do have it out there. And then seek a financial advisor. Sometimes a financial advisor is always on hand to help out, to give you the good advice on what to do with your money as you get older. Because as we get older, we have the money, we're paying for our daily living, but we want to know exactly what else can we do to help it work for us. And I have PSC here to help out, give more information in that area if need be, so that way you can know how to make sure to plan your money properly. Or you can put it in a nice account, or whatever the case may be. You probably already have it in it. Another thing is to plan for any medical expenses. As we get older, you get ailments, things happen. So we plan for that by putting something aside to make sure that if anything do happen and it's not covered in our Medicare or the Medicare Part B, or something that's not qualified for that, we have that, so we don't have to overburden ourselves in case something like that happens. So it's good to start planning in that area. A key takeaway is when you turn 65, the standard deduction for single filers increases by $2,000. Okay? If you're married, the standard deduction increases by $1,600. If only one of you is 65, and by $3,000 if both parties are 65 years old. Starting in 2025, a new senior deduction, and that's another one I wanted to just point out and bring to the forefront. Aside from your standard deduction, the IRS is now saying, when you're 65, we're going to give you an additional $6,000 on top of your $15,750. So now you're 65, you get $15,750, and then you also get that additional $2,000, so that's $17,750. But you know what? They're going to throw in an extra $6,000. It obliterates your taxable income, because based on, depending on how much revenue you have, if by the time they finish all these deductions, there's no taxable income at all. So whatever monies you paid in regards to federal taxes, If you paid into that, you get all that back. You see what I'm saying? If you have not, now you're balanced out. But the IRS want to see that you're balanced out. So a lot of times, what I do for my clients that have multiple streams of income, I still put it through for information purposes to confirm and verify that they don't owe you and you don't owe them. Even though they have multiple streams of income, based on all the deductions that they were eligible for, it's a wash. And that is the better way to handle that, particularly when you have multiple streams of income. Now, there's a special form that they have put out for seniors where after turning 65, it's called 1040 SR. The form is bigger, so that way people will be able to see it. It's specifically designed for senior citizens. And it uses larger fonts, and it also have all the information automatically input for the deductions that is eligible for the senior citizens, okay? Now, a lot of times people require assistance to be able to complete that. You may qualify to participate in the IRS Volunteer Income Tax, which is a VITA program. A VITA program helps individuals, senior citizens particularly, be able to prepare their taxes for free. Why would you choose a VITA program? Because there's no cost. You have trusted tax preparers that are IRS certified. They're confidential, and they're designed to serve and empower our local community. So a VITA program is out there to help individuals, particularly senior citizens, prepare their taxes and be in compliance with any tax laws and regulations, okay? They have several locations out. We have one in Virginia Beach, in Hampton, Portsmouth, Chesapeake, and then we also do virtual. A lot of people go to the one in Virginia Beach and Portsmouth, Chesapeake. No one likes to go into Hampton, I don't know why, but that's okay. But we do have individuals that still go out to Hampton. But these are good locations and something to think about when you're ready to do your taxes, because again, it saves you money. To have your taxes prepared, and I myself am an accountant, and it can be costly because you go into an accountant's office to have your taxes done, it can cost you from $350 to $500 to have your taxes done. Whereas you can use one of these VITA programs that is IRS certified, and you walk in there, sit down with your paperwork, and they do it for you for free. And they'll provide you with all of the required information necessary to prepare your taxes correctly and accurately, okay? They open every Saturday. Now, my thing is a lot of times some clients come in and they're not able to get to these locations on a Saturday. But what we do is say you can also drop it off. You can speak to the tax professional, see what you have, and then if you like, you can drop it off and they'll go ahead and do it for you. You can either come back or they can bring your paperwork back to you, so then that way you can be completely filed on time with no problem. So again, it's every Saturday in the Virginia Beach from 10 to 2, in Hampton from 1 to 4, and in Chesapeake from 1 to 4. So, but these are good locations that you can use, and this is a good site that you can use, again, to help you get your tax returns prepared accurately by an IRS certified preparer and for free. The key word here is free. I want to just be on free for you.
You guys make an appointment for that? Or?
Yes, and we have some literature where you can use to be able to give them a call. So, Life Financial we're committed to providing accessible, trusted tax services to help seniors, okay? We want to make sure that they're able to navigate the tax season with confidence. And they want to be able to take the stress off of the client and put it on us, because we want to make sure that everything that is provided to you is provided accurately, and then you'll be more calmer when it comes to taxes, because we sit down and we go over everything with the client from the beginning to the end. And we try to explain it so that way they can understand it. Not using the jargon of the tax laws, but using the regular real world words that's understandable to the individual, okay? So again, we're partnered with the Internal Revenue Service, where we are able to provide this free tax preparation services. But we also provide information for the AARP because we've also partnered with them to be able to prepare the taxes in their community as well. And any agencies that are helping the senior citizens in that area. Okay, so that was that in a nutshell. I wanted to be able to give that information to you so that way, again, you could be more informed, so you could be able to understand things a little bit more. And then when you go to have your taxes, now you're confident to know what questions to ask and how it's going to be able to be navigated for your benefit.